Hey traders, Steven here with thetradersplan.com. Today we're going to cover the indices are either at or close to an all-time high. Looking like could hit short-term resistance, so we're going to take a look at that. We're going to look at the sectors, and we're going to look at bonds. Bonds are starting to break out, so we're going to figure out how that correlates with your portfolio. And we have to look at weed stocks because the cannabis stocks, I talked about a couple weeks ago how Canopy Growth got an investment from Constellation Brands, the maker of Corona beer, and that just made everything go parabolic. So made a little bit of money in some weed stocks already. Looking for some setups, but we're going to go through some charts today of some individual stocks, the ones that I watch the most closely for liquidity. So let's really start with the NASDAQ right here. There is really nothing to be bearish about as far as the indices are at an all-time high. Both the S&P 500 and the NASDAQ are knocking on the door. The Russell 2000 broke to an all-time high. We're going to look at breadth here in a second, but gross stocks are doing well. This shows signs of a definitely risk on. They've moved at least a lot in the last week. So, last week I talked about a couple things. So I mentioned that every now and then what can happen when you get to when it starts to chop at an all-time high and then you get to an all-time high, you can have kind of this like blow off the top day. And that just means where everything's up. Like look at this day for the NASDAQ right here. Actually let me get that inspect off because it's getting on my nerves. It broke out, it just popped, everything's bullish, you think it's getting ready to run, and then it kind of hits. And then you can see right here, you have this blow off the top day, and then you get a little pullback. So typically, and it's very common, rallies will typically don't start at an all-time high. They start as the market's pulling back, and then you get a signal, and then they start to run. So a lot of times when it does, if it's been running a while and it does break to an all-time high, it just might pull back a few points. I really can't make the bearish case for anything right now just because, except for these little tweezers right here, which we're going to talk about here in a second, but everything's at an all-time high. Growth stocks are looking good, and to me that shows signs of a healthy market. Now, if I did want to make at least, I would say a bearish case, a short-term case, you can see that right here, the NASDAQ tried to break to an all-time high and got within 10 points of an all-time high, and then kind of sold into the close. And then it really happened again today, Thursday, the 23rd. So one could make an argument, well, obviously this is an all-time high. You could say, hey, this is just a little pullback. It's getting set up. It's ready to take off. It could easily do that on Friday and Monday. It also could pull back a few points. So we've been taking a lot of profits into some strength this week. So we've done pretty well. The subscribers have. But you have this kind of sell-off. So you haven't happened the last two times it got into this level. So there's some resistance there. However, the long-term trend is up. So I'm always trying to be aware. Typically when stocks are getting kind of choppy like this, I do like to look at the growth stocks just to see how they're acting, if they're acting well, which they are. I'm not going to be too worried about, but me personally, I might see if the market eases a little bit. Sometimes I always get this feeling like the market's going up and you just get the feeling like I gotta buy. And this is just kind of me personally. So every time I get that feeling, I'm like, let's just take it easy. Cause every time, things are moving and you're watching them move and you want to, get in even more, sometimes it's just a sign that, hey, maybe just the market needs to ease a bit, but it might not. So we're just at this resistance point. We're going to see if the NASDAQ can break an all-time high. It hasn't yet. It could be a short-term pullback right here, into this zone. We'll just kind of, or a consolidation. We'll kind of have to wait and see. If I take this chart back a little further, you can see the S&P 500 is right at where it was back in January. Clearly the NASDAQ is not. Now, who's to say that it's going to be easy, because you got this sell-off and this sell-off, and when you're in the heat of the battle, they don't look pretty. And trust me, every time this happens, I have what sometimes I call it's the big one-itis. You think that it's the big one, it's coming, or at least a good market correction, and it's just a pullback. Find support. So, and sometimes I have to remind myself this, like, look for the oversolds. This gap down is not pretty, but it firmed up right here and then went up. And then you had another couple ugly days, but it firmed up and then it went up, and now the consolidations are getting smaller. So just kind of create a little cup here. So which way is it going to go? I don't know. So a lot of moving parts here on this, but as I said in the previous chart, the S&P 500 is, right at where it was back in January, and it hasn't closed above that level, even though the NASDAQ and the small caps have. So it's been lagging, although it's been leading a little bit this month. So it's at several kind of resistance lines, and I don't try to pay attention too much to resistance when you're in a strong bull market, because it typically will get taken out. But you have this trend line up here, which every time it's hit this, it's pulled back a few points. Nothing big, just a few pull back, pull back, pull back. I don't even know if I call these a pullback. It's right at that level, kind of a three-way resistance. So it's at the horizontal resistance, it's at the trend line resistance. Actually, that'd just be two, but it has gotten to that level where it kind of gets up, and then you can see it sells off into the close, as it did a couple days ago on Tuesday, I'm kind of a little off my words today. But I think you can kind of see this right here, and I don't think anything drastic is going to happen. It could punch right through. But it has pulled back a few points, so just kind of keep that in mind when you get a nice little run for a few days. Could ease a little bit, and you got the 20-day moving average under it, and it has found support. Even though on this one it didn't find exact support, it did break it, but it came right back. The last two times, sometimes the third one, is typically where it might break and consolidate for a little bit. So you have to assume a consolidation to pull back, and not try to overanalyze what's going to pull this sucker way down, because then you're going to miss opportunities. And just a quick look at the Russell 2000. I thought this was going to break down, I'm not going to lie, and I was wrong. It just powered through, and as now it's trading nice and sideways for the last couple weeks. Hadn't really moved a lot, but it's not going to go up every single week, every single day. But it had a nice move on Tuesday, which is interesting because that was the day I think that we just looked at the S&P 500. Actually, let me go back a day. Yep, that was the day S&P 500 kind of gapped up, just a mini gap up, and then sold into the close. But it looks good to me. It's kind of hard to argue. Is that a pretty? No, but consolidations aren't pretty. I don't know how many of them that are. It's harder to find these neat and clean pullbacks, and they just get choppy, but you just have to be flexible and wait for the breakout. If to continue to add to the bullish case, you have the high-low percent index, which is a breadth indicator, S&P 500, new highs, net new highs, and net new lows. That had a nice little bullish thrust there. Same thing with mid caps, small caps right here, and you have the NASDAQ right here. So lots of accumulation, not a lot of distribution, which is interesting because we're about to let the summer months pass us by, and really hasn't had anything too scary. You have the 72% of stocks in the S&P 500 are above the 200-day moving average, so there's plenty of broad participation. Yeah, it was starting to curl down, and I was watching it, but it came right back up. So it's just the uptrend continues. Let's look at the sector summary. Okay, so today the XLK technology was up. That makes sense because we've had a nice run, materials, energy, and down. I want to go to this perf chart. Okay, so let's take that off. Let's look and see. Had a nice week in the market. See what has led. Energy has led. It's kind of an oversold bounce. Cyclicals, technology, and healthcare, that's nice. Staples and utilities have lagged. That's also nice because those are more defensive sectors. Now, if I go to the last 22 trading days, it's kind of the other way around. You have consumer staples and utilities are up there. Healthcare still remains strong, so a lot of opportunity in healthcare right now. Energy is still down. Materials, technology is still down, but technology looking like it's making a comeback with what it's done this week. So I wouldn't get too concerned because the growth stocks are still looking good right now. So, you know, I mean, how do I analyze this? We're at an all-time high. So it's just, let's play that. It really depends on, you know, if you're long-term, if you're short-term. I tend to trade both. In the long-term, there's no way you can really be bearish about anything in the short-term. The market might pull in a few points. Hasn't yet. But I think with everything, and actually let me kind of go back to, the NASDAQ real quick. I really think with anything, you know, you have your short-term swing trades and that's fine. You know, you sell in a strength, you take profits. I'm not really talking about that, but if you have positions intermediate to longer term that you want to hold, you gotta stay in them until they break. You gotta follow the price first, volume second, and then you can fancy yourself with all those secondary indicators. But, you know, I'll give you a perfect example. Now, you can see right here, you had major volume coming down. It found support, and a lot of volume over here, and then you had quite a bit of volume coming back. If we look at this one, you had a lot more volume on the downside than we did on this uptrend. Right here, you can see a couple nice support days, but then not a lot of accumulation. But my point is, if you were just focusing on the volume and always saying, well, there's all this volume over here and there's not enough volume over here, I'll do that with individual stocks. But the indices, and I've studied them, I don't believe that they necessarily follow the volume notion. Now, you want volume. I'm not making the case against it. I'm just seen time and time again that the market can go up without accumulation. So my point is, I wouldn't necessarily making trading decisions on that. You follow the price first, and then the volume second. A lot of times they do go hand in hand, but now you can see right here, you had a couple volume, couple distribution days, couple gap downs. Not a lot of volume right here, but even if you didn't, now, and then you have this this reversal, not necessarily a nasty one, but one can make the case, okay, that might give a little bit more evidence for it to pull back. But either way, it's still back at an all-time high. So how you could, you know, you can sit here and make a bullish case or a bearish case, but my point is, let whatever you own, it always makes sense to have an exit plan, but if you want big moves, you have to give them room to breathe. Okay, what is next? I did want to show you a chart that just does look a little interesting to me. And that's the India Stock Exchange, given the fact that emerging markets are just getting slaughtered. Excuse me, this is the Bombay, I'm a little bit under the weather, so this is the Bombay Exchange. Now, a lot of times if I made the case, and I made the case a couple years ago, like, look, India is probably something you want to own, and just a few quick points. They have estimated GDP growth of 7 to 8%. That's massive over the next several years, and we're probably in year 2 of year 3 because this is an older chart. Over half of the population is under 25. That is incredible. You have a very young population. They have, you know, they're not going to have like the China problems of, you know, not having enough people, you know, of an aging population. And they do have a huge need for massive infrastructure investments. That's really one of the problems the country has. We all have problems, but I mean, that's one of them they have is their population has been growing so fast and they have a young population. So lots of investments are needed. My point is, so this Bombay Exchange, and you can see right here, and this is a very, very long-term chart, is is not only at an all-time high, but I mean, it looks like the NASDAQ and then some. So you have this relative chart of the Bombay Exchange versus the S&P 500. It went on a massive run where it smoked the S&P 500 for about 10 years. You can just say from 2000 to 2011, it really outperformed the S&P 500. If you want to run the math, you can run the math, but I guarantee you it was a lot. And then you have an extended period where it is underperforming the S&P 500. And one can make the argument that this is kind of, the last several years has probably been performing in line to slightly under. Well, now you have the Bombay Exchange broke out of a relative ratio that's about 7-8 years old. That's interesting, especially when this exchange doesn't really care that the rest of the emerging markets are selling off. I meant to, as a matter of fact, I did. And let me just throw in another ETF here. Now, the Indy is just I think the top 50 stocks in India as far as large caps go. It is underperforming. So you have the exchanges are starting to outperform. They broke out. The indexes or the ETFs are underperforming, or one could make the argument, because it's just really been going in a sideways trading range, pretty much performing in line with the S&P 500. And you might ask, why is this one outperforming, but the actual ETF is underperforming? A lot of times it just has to do with currencies. You know, you have to exchange the stocks into U.S. currencies, and whatever the two pairs are doing, you know, that can throw off what the actual performance of the indices look like. My point is, if this curls up, you know, you have this breakout. This is at an all-time high, and emerging markets are in a bear market. If this curls up where you can find an India ETF that starts to outperform the S&P 500 on a relative basis, might not be something bad to look at. And I'm not saying short term either. How I would typically play these is just use a simple 10-40 weekly death cross, golden cross. So, you know, when the 10 week is under the 40 week, you sell. When it's above, you buy. So you have, and you're going to get some whipsaws. Whipsaws are a part of trading, but, you know, one thing I heard, you know, whipsaw, the trends are greater than the whipsaws. So you're going to get some whipsaws. It's going to happen. You would have lost, you know, if you would have sold right here and had to buy back a little bit up here. But then look at that massive trend. And it's really, this process is it's really easy to follow. I'm not telling you to go out and buy this. I'm just saying that, you know, if you have a sector that you like or a country you like, just use it, you know, and you're not sure when to play it, how long to hold it. Well, they can make multi-year moves. So it's just not a bad enter and exit strategy for anything, not just this. But it's pretty extended, so I wouldn't get involved. I mean, you can see right here, it's going straight up, so I'm probably not the best place to enter, but this is one of the bright spots in the emerging markets, pretty much one of the only ones I can find. Okay, let's look at bonds for a second, because they're starting to get interesting. Why did it do that? Okay, let's try that again. Got it. Okay. So you have TLT right here, and yes, you could use AGG, you could use other bond ETFs, but this is a pretty liquid one. So you have this TLT daily chart, and just follow the orange line. You know, it got rejected. So you have this downtrend that has gone back 2 years. So you have a 2-year downtrend. It's been touched several times, so in my opinion, that makes it legit. It got rejected here. Also got rejected at a horizontal breakout, got rejected here, but it's come back. So now this isn't what I would say a definitive breakout, where just there's no question that it broke out. But I would say this is breaking out. You got a double bottom. You have a series of higher highs. So you got another high here, high here, high here. So you have higher lows. So you have 3 higher lows. I told you I was off with my words today. And the breakout. So that's interesting, because bonds have really not done anything for the last 2 years because treasury yields have been moving up. So up above, so I would take that seriously if it can really follow through and get up into this horizontal breakout right here of 122.5, it's not that far away. This purple line is the relative ratio to the S&P 500. So you can see for the most part, it's, S&P 500 has outperformed this for the last 2 years. In the last month, while this has been breaking out, and this just broke out the last day or two, the relative line has been pulling back. And if you saw my webinar, I believe it was last week, I showed you the relationship of the TLT versus the S&P 500, and we talked about if the RSI gets above 70, a lot of times that can open the doors for bonds to outperform the market for a period of time. Doesn't mean the market's going down. It just means the bonds are going to outperform. And then all of a sudden, that was last week. Now all of a sudden we have a breakout, and now I'm looking at this relative ratio, and it's kind of curling down a little bit, meaning bonds are starting to outperform in the last several weeks. So, the evidence is adding up. Now, how can we play this where, what is highly correlated to bonds? Now, let me be crystal clear. Bonds and stocks, they can definitely move together. I would not just say, hey, just because money is flowing in bonds, it means that the market's going down. Not even a little bit. They can have bull markets together. But sometimes when bonds are going up because of the interest rates, that means yields are going down, as we've been talking about that for the last several weeks. What is correlated to bond prices? So I have, utilities right here, a correlation chart of TLT and utilities. And you can see that, it's not 100% of the time, but I would say 75% of the time, utilities are correlated positively with TLT. That's the XLU ETF versus the TLT. So right now it's very correlated. That means that if bonds continue to go up, that could push, it means REITs are going down, could push utilities up. Same thing with REITs. I would say REITs are highly correlated because they're dividend-paying stocks. When the interest rates go down, typically, people might flow into to get that. They're chasing that yield, right? So you have the interest rate stocks, the REITs. It's pretty highly correlated to the TLT. And I've noticed, I threw telecom on here. I've noticed that it's about to have a golden cross, at least. The IYZ is very close to having a golden cross and be out of that bear market. I'd say it's moderately correlated just because you can see more down here. There's more times where it hasn't necessarily gone, but I want to say right now that it is. So you have a lot of interest earning ETFs that are moving in that directions as bonds are breaking out. So it's just interesting. Now, I say that to say this. Technology is still at an all-time high, so I'm not saying that just all this money is flowing into the more defensive, so you need to play defense. Because it's clear with the S&P and the NASDAQ at an all-time high, and these are moving too, that they can all move together. There's broader participation. So I just wanted to show you that, see how you could potentially profit from rising bond prices and lowering bond yields. But again, this isn't like a blow off the top breakout. So we're at a major inflection point where if it continues to blow off, go up another point or so, I would definitely look at these ETFs, and you could even break down some individual stocks. Which is also interesting because we're apparently in a rising interest rate environment. So just, you got to keep everything in mind. This was just a chart I had to show you. And we'll look at the TNX real quick, and we'll look at a shorter term chart. It's a 45-year chart. Yes, I like to look at long-term charts. That kind of looks different because it was marked out, but let's just not focus on that. Focus on right here. We're also at a inflection point with yields where you could have a lower low in the short term. But you could say it's a mini head and shoulders, but it could just pull back, kind of gear up, get some fuel, and then take off to get us out of this 30-year bear market in the treasury yield. So again, you had a bullish flag right here. It pulled back significantly. This could just be doing the same thing. So again, I'm not saying it's going to come back all the way down here. I think that would really throw some things out of whack. But it's worth looking at. Let's just look at the dollar real quick. The USD weekly, it did break out of a head and shoulders. I think that's crystal clear to everybody right here. It has been pulling back. It's been pulling back in the month of August, which it does not go straight up. I don't know anything to go straight up. But it's worth noticing. You really have to anticipate that it could find support in this zone. But we'll just kind of wait and see. But, you know, the dollar, after a major run, consolidation, good, nice thrust upward. I mean, if there was any question that the dollar has broken out and entered a new bull market, I think that has been answered. Now, how long does this last? I don't know, but we'll just kind of keep an eye on it. But everything still looks good. You have to assume this is just a normal pullback in the dollar. Let's go look at some cannabis stocks, because I think that is, you gotta look at them right now. So I don't want to see, I just want to show you how much some of these are up in the last 1 week. I mean, that is broad, and this is just a chart list, just one of mine. Actually, I got it from Greg Chanel. But it is, I mean, that's broad participation. That's not a little participation, that's a lot of participation. 1 week. Now, you have a lot of these penny stocks, and I don't trade. I don't typically come all the way down here. I like to really focus on, you know, the volumes, the one that have pretty good sales. A lot of these smaller ones, they're, you know, they might have $1 million in sales, maybe a couple million, but you got the big ones like, you know, Aurora, Kronos is one that I like, even though it's extended right now. So you can see right here, and we're going to look at a few of these. There is a theme. This day, right here, let me actually, let me kind of delete all the yes, I want to remove all the annotations. Yes. Then I want to make this a little bit shorter. Actually, is that really only 1 year? Let's go 6 months. Just so we can zoom in a little bit on this chart. Man, that's a big move. So you had, I could draw a downtrend line right here. It broke out clear as day. Now, that makes sense, this level of breakout. But this level of breakout right here, I mean, this went from $5.60 to $8.80. Almost, let's just call it a 40% move in, you know, 2 weeks. That's big. And what's just as big is this, this institutional buying right here. And it all started on this day, whatever day this was, on August 15th, when the Corona company invested in Canopy Growth, $4 billion. And then I thought it might pop for a couple of days and then pull back, create consolidation. Man, that didn't happen. Not even a little bit. We did have the weed ETF. We sold some right here, but it is very, very strong. Now, I'm not chasing it up here, but that trend has changed to me. So this is just kind of one of the stocks that is looking interesting and looking strong. One that, you know, I would look at just because of its liquidity. So, and this is a weekly chart of Aurora, and this is also looking interesting. You just have from $12.30 to $4. I mean, if you bought up here, you're not happy. That's why you can't really chase something. But look at it. So I love weekly charts because sometimes they just get rid of all the noise, and then I like to really focus on volume on the weekly chart. So you have the accumulation, no real distribution on the weekly chart, even though it went from 7 to 4, which that kind of blows my mind. It went such a move down, but didn't really seem like there were net sellers from a volume standpoint. And then you have accumulation stepping in, so you have clearly institutions. The money is exchanging. You see it pulls back. The institutions start to buy. It starts to pull back a little bit. We can start to sell, and then institutions step in to buy. And that's what a lot of them look like right now. So it is just, it's looking pretty strong right now. You got a weekly reversal pattern right here. Now, it's 50% above that low. So I'm not telling you to go out and buy a weekly reversal pattern because you're going to have to risk 50% to the downside. It's extended in my opinion. You do what you want. I'm not chasing that. But looking at the volume is very, very interesting right there. Let's go look at another one. So that was Aurora. Again, I'm not looking at the dollar stocks. We'll make sure I'm not missing anything. Aphria, that's what I want to look at. Okay, so let's just look at the weekly chart on this. Kind of looks similar, doesn't it? Even though there is a little bit more distribution right here, but weekly reversal pattern, there's a lot more accumulation as this is, I would say this, you could call this just a big first stage basing pattern before it takes off. And maybe it comes down lower, I don't know. But a lot of times when you see that happen where it sells off and then you just get big accumulation spikes, and I could draw a box around this if I wanted to, just so you could kind of avoid all the remaining noise right there. Because you can see that looks like it's first stage. Reset the deck, and we'll see, you know, what happens as it's coming out of here. But definitely worth paying attention to. We looked at Aphria. There was. Let's look at Canopy. Let's look at Canopy. Because you can see right here, let me kind of shrink this chart a little bit. Go to 5 months. Check that. Look, this is when the announcement happened. And this looks similar to slightly better because it's above the long-term moving average. There's the announcement. There has been no looking back. That's a major move, and all these are worth paying attention to, even if you look at the MJ chart. Let's kind of look at a weekly chart. You can see right here, it reversed up nicely this week, up 12% this week, but this is obviously a very ugly downtrend. This is an ETF, so you could play the Golden Cross Death Cross rule. It's definitely in a bear market. So I'll be interesting to see how this continues to play out. But I will say this much. After all the volume that just went into some of those individual stocks, I would be surprised if it rolls back over and takes out the new lows. I think, you know, I would be looking for some kind of pullback, consolidation, cut, flag, whatever, kind of a pause, and see if it continues to take out those new highs. So just looks pretty interesting. Okay, so one chart I want to show you. Okay. So sometimes it's worth looking at a stock before it broke out and then after. So this is i3 Verticals. Software stock. I emailed this out to everybody on Monday. So on Monday, I emailed out, kind of not really making the case to go out and go buy it, but I was just saying, hey, this stock is looking like it is ready to make a big move. It IPO'd right here, sold off, and a lot of times with stocks, I'd never buy IPOs just because they haven't found their personality yet. Downtrend. Then it makes an uptrend, cup with handle, tried to break out on an earnings pop, but then started coming back up and then just trading tightly right here. Now this is a daily chart, but when it started curling up and finding support at this 20-day moving average, I emailed it to everybody, and the very next day it broke out. I made the mistake and didn't have my buy stop order in. I'll explain that in a minute. So it is up very nicely from the time I 16 to 18.12. Now, what I should have done if I was smart is a lot of times what happens is I'll identify a point, and I don't necessarily want to buy it up here because that's a pretty good move up. I'll say, okay, I'm always trying to get a lower entry, but to clear a couple candles. So I'll say, okay, 16.30, 16.20. I'm going to put a buy stop order in for, say, 16.35. And what that means is as soon as it crosses that level, it's going to automatically purchase. Now, why I do that is so I don't have to watch the stock if I think it's going to be a big mover. So it's just, and I didn't do that, and I'm paying for it. But a lot of times, if you think of stock is going to be fast mover, but you're not glued to your screen, you want it to wait to cross a certain level, you can put those buy stop orders in place. And I noticed one other stock, and just kind of remember what this chart looks like. One other stock that is looking very, very similar. Did I type in the right NTGN? Oh, NTGN. Then I wanted to show you one other chart that looked almost exactly like it, and it's NTGN. Looked exactly like it pre-breakout. Now this is a very thin stock, so there's a lot of extra risk when you trade these thin stocks. But I mean, you can kind of look at right here. You could draw it right there and say it broke out, but here's my point. It dropped just like the previous stock, popped on earnings, couldn't quite break out of a downtrend, and then traded sideways and is somewhat finding support around the 20-day moving average. So it was down today. It's very thin, only 26,000 shares. So I just wanted to show you that sometimes, when you see one thing, I don't know anything about biotech stocks as far as phase trials, anything like that, but when you see one thing on a chart and it worked, and then you start to see it over and over again, and then all of a sudden you see another chart that looks just like it. It almost did the exact same thing. So then it's worth paying attention to. So this is on my watch list. I don't know if I'll take any action. Probably won't, just because it's so thin, but I took one chart that worked, and I found another chart that looked exactly the same. And to this day, I think the single best thing you can do for yourself as a trader, just to, go through some charts, print them off, take a pen, mark it up, just be incredibly observant to see if you notice some of the same things over and over. And by doing that is, you train the eye, and then you can start to identify these, go through charts very quickly, and identify if you want to, take action on something or not. So I hope this was helpful.